originated from potentially a place of protection, but it's really resulted in limiting who gets capital and who gets to benefit from investing in entrepreneurs as well as private venture funds early. So thinking about Backstage Capital, we invest in early stage founders. And, where do founders get some of their capital in their early days? A lot of it is from friends and family. And, if you can only tap into your immediate resources, friends and family wise, but a lot of them might be missing or not able to qualify for being an accredited investor. So that limits the entrepreneur from maybe even getting that first $25K, $100K to get started, even if they have that available in their network from people who want to invest and participate in supporting a friend or a family member and getting their business started. That person, the entrepreneur, can't tap into those resources. So, who gets to invest in companies directly impacts the entrepreneurs that are able to get that initial capital to get started. And we've seen that, time and time again, where, the founder would like to be able to tap into their community and the people that they have surrounding them, but can't do it because their community might not be meeting the requirements of accredited investors.
My name is Ryo Ishida. I've worked in real estate private equity for the last 10 plus years or so. I'm one of the managing partners and co-founders at Rainbow Capital Partners. We've been around for the last couple of years, based in San Francisco. Just as background, Rainbow Capital Partners, we invest in underfunded folks in commercial real estate, primarily focusing on people of color, LGBTQ+ and female entrepreneurs in real estate, as well as underfunded markets. We invest heavily in markets like Southeast Los Angeles or Baltimore, Maryland, where I'm originally from, where traditional capital often overlooks some of those markets. And then in every deal we do, we also allow ordinary investors to access commercial real estate properties and funds. So one of our main social missions is to continue to lower the barrier for commercial real estate investing, as well as the education and access for ordinary investors. So this topic that we're talking about is sort of very near and dear to our heart. We definitely worry that while the law proposed changes is well-intentioned, it can sort of have adverse effects where some of our investors who want to invest in one of our projects and where we create space for them can't invest because of the technicality of they're not an accredited investor. And in every deal we do, we raise anywhere from a couple million up to 25 million in equity. We always save a couple $1 million tranche for ordinary investors to invest. And about 95% of our investors on the retail side are people of color, females, and LGBTQ plus folks who typically traditionally haven't had access to make financial decisions like that. But again, we're sort of limited by the law on only accepting accredited investors, even though we probably have a wait list of folks who don't fit that technical definition, want to learn about real estate, as well as invest into commercial real estate.
Hey everyone, this is Dara Albright. I am the founder of DWealth Education. And I just had a couple of comments that I wanted to say with respect to the accredited investor rule. This is something that I've been writing a lot about over the years, thinking a lot about over the years. And I think what it all comes down to is broadening the not only access for investors to be able to have more opportunities, more investment opportunities for their portfolio. And we all know what having greater access and more diversification does to a portfolio. It basically, modern portfolio theory throughout, the decades and decades has been the one tried and true investment strategy that has worked throughout the course of time. But what most people don't really think about when it comes to diversification is how does diversification impact the issuer? the business? How does having more investors or a much more expansive investor base or cap table help the issuer? I think that if you have a much more expansive cap table and investor base, this gives really the upper management of the company really more freedom to do what they do best, which is innovate, and that's really what this is all about.
Hello, my name is Ramona Ortega. I am the CEO and founder of My Money, My Future. We are a Backstage Capital company and have been doing financial education and financial inclusion in this area of fintech for many, many years now. I am also a trained attorney. I have spent some time in securities litigation, and so I have a lot of thoughts and a lot of opinions about the accredited investor rules and guidelines. As someone who is dedicated to ensuring equity and financial inclusion for all, particularly communities of color, and with a special sort of focus on closing the racial wealth gap, I think that the rules that as they are now have a disproportionate impact, a negative impact on communities of color, particularly given the racial wealth gap that exists. So two things that are really important here in terms of consideration as people are thinking about rule changes. One is the requirement for the sort of net worth piece here. And that the reason that the net worth sort of requirement at the $1 million threshold is important is that we know that there is a huge racial wealth gap, meaning that the net worth between white families and families of color is about $100,000 difference. And that $100,000 difference makes an incredible impact on things like the accredited investor rule. The last federal report from the St. Louis Fed had a statistic that I think is very important for this particular ruling, which is 15% of white families are millionaires. Only 2 and 3% of Black and Latinx families are millionaires. That directly impacts their ability and opportunities to invest in private companies because of the rules that exist right now. So I might not, in fact, be an accredited investor, and yet I have participated in the ecosystem. I am a fintech entrepreneur. I am a thought leader in this space. I probably think about and talk about this stuff more than most people, and yet I would not be necessarily considered an accredited investor under the rules as they stand. So there is a real necessity to think about who is not only an accredited investor by the rules in terms of net worth, but also in terms of who's a sophisticated investor. And I think that a lot of my work focuses on financial education. And I'll tell you, having spent time on Wall Street, that many people on Wall Street are not necessarily sophisticated. You can have enough money to invest in things like crypto or REITs or alternative investments and not be savvy or sophisticated. But again, as we look at it through an equity lens, the requirement of $1 million in net worth or even $200,000 in annual salary really has a disparate impact on communities of color, and especially those communities that are in fact financially mobile, that are looking to build wealth. And if we look at the history of this country, most wealth has been created by investing or building a business. And so when you are taking this opportunity out of the market, I think you're really impacting the ability of those communities to build wealth over the long term. Anybody that's been in the Silicon Valley ecosystem for years can see that those early investors into private companies like mine that eventually go public or get acquired those early investors get a windfall of capital that changes the trajectory of wealth for their families and their communities. And I think that's what we're looking to do, is really create that opportunity for everyone to participate. Now, given that there's a lot of risk in the market, having someone that pays a lot of attention to regulation and wanting to make sure that people are protected, I don't think that opening up or redesigning the accreditation requirement opens up people to more risk than there already is in the market. We have allowed crypto to grow, and different types of alternative assets being put on the market, and most people have access to those kinds of asset classes. And so I don't think that opening this up to a greater amount of people necessarily puts them at risk. So I hope that that we can really think about not only the accredited investor thresholds in terms of net worth, but also in terms of sophistication, because I think those are two prongs that really require an additional look at, and that they can, really benefit from an additional lens and creating new opportunities under the definition.